Welcome to the Deep Dive, where we unpack complex information and pull out the most important, surprising, and frankly just fascinating insights for you. Today, we're plunging into a market that might operate quietly behind the scenes, but it's absolutely fundamental to global stability, the crude oil storage market. We're taking a close look at a pretty substantial report, Global Crude Oil Storage Market Insights 2021-2033, from Cognitive Market Research. Our mission really is to understand the true scale and the future trajectory of this critical infrastructure. You might be surprised by how much is being invested in something often overlooked. What does this investment tell us about, well, the world's energy future?
It's truly compelling, actually, how these raw figures unveil a powerful narrative about global energy demand and strategic planning. We're not just going to, list the numbers. We'll explore why they matter, digging into key regional differences and the underlying drivers of this multi-billion-dollar market.
Okay, let's kick things off then with the big picture. The report shows, well, pretty consistent growth for this market. In 2021, global crude oil storage generated close to $16 billion in revenue. Almost 15.9 billion to be precise.
Right.
That figure is expected to climb to over $18.5 billion by 2025 and then really jump, potentially nearing $26 billion by 2033.
Yeah, looking at the bigger picture, this translates to an average annual growth rate, often called a CAGR, compound annual growth rate of just over 4% globally, 4.138% to be exact. This steady expansion highlights, well, a few core dynamics: consistently rising energy demands worldwide, increased oil production that needs a place to go, and the absolutely critical strategic importance of having robust storage infrastructure for both market stability and, national energy security.
Right.
It's a testament to how crucial managing and securing this resource remains. It's not just about pumping it out of the ground.
Absolutely. So from that global view, let's maybe zoom in on the regional breakdown, starting with North America. This region was a major player at just over $4 billion in 2021. That's $4,062 million. And is projected to rise to more than $6 billion by 2033, growing at an average annual rate of about 3.5%, 3.471%. Within North America, the United States is clearly the dominant force. No surprise there, maybe.
Not really, no.
Revenues topped $3.4 billion in 2021 and projected to reach over $5,085 million by 2033.
But there's a fascinating nuance here, isn't there?
There really is. What's truly interesting is that while the U.S. leads in sheer volume, right, Canada actually shows a significantly higher growth rate within the region.
Higher? How much higher?
Over 4.4% CAGR. Their revenue is projected to grow from around $313 million in 2021 to over $526 million by 2033. And this isn't just like general growth. It often reflects specific infrastructure projects tied to new oil sands developments or maybe a strategic push to secure export capacity.
Oh, so different drivers.
Exactly. A distinct policy approach compared to the U.S.'s broader, more diversified storage landscape. Mexico also contributes steadily, projected to pass $500 million by 2033. Okay, so from the established markets of North America, let's turn our attention across the Atlantic, Europe. It presents a very different picture, I imagine, with its own unique geopolitical pressures and energy strategies.
Definitely a different landscape.
This market was valued at nearly $3.2 billion in 2021, set to grow to almost $4.9 billion by 2033. That's an average annual growth rate of just under 3.7%, 3.666%. Germany emerges as a strong performer here. Revenues projected to rise from over $644 million in 2021 to more than $1 billion and $1,058 million by 2033. That's a 4.3% CAGR. The UK also contributes significantly, growing from over $462 million to more than $735 million by 2033. We also see France and Italy making notable contributions. But you mentioned different dynamics. What about a country like Russia? Their growth seems to lag considerably in the report.
Yeah, that's a sharp observation. Russia, for example, shows significantly slower growth. Their average annual rate is less than 1.8%.
Wow, only 1.8.
Yeah, barely moving from about $137 million in 2021 to maybe $168 million by 2033. This stark difference, it really highlights varying economic factors and energy strategies across the continent, often influenced by their domestic production, export priorities, and geopolitical relationships. All that can impact investment in this kind of infrastructure. It's complex.
Very complex. Okay, now if you want to talk about rapid expansion, prepare for the true engine of growth. Asia Pacific.
Ah, yes, Asia Pacific. Always a big story in energy.
This region was already a powerhouse at over $6.7 billion in 2021, $6,728 million, and is projected to hit a massive $11.6 billion by 2033. $11,642 million,
Huge numbers.
with a robust average annual growth rate of nearly 4.7%, 4.685% by 2033.
Right.
But here's the truly compelling detail, I think. India shows the highest growth rate in the entire report,
That's right.
nearly 5.5% annually. 5.468%. Its revenue is expected to jump from just over $1 billion in 2021 to over $1.9 billion by 2033. What's driving such explosive growth there?
Well, the strong growth in Asia Pacific isn't just about general economic expansion.
Yeah.
It's often about specific national strategies for energy security, massive infrastructure investments to support industrialization, hedging against volatile global supply chains, that kind of thing.
Makes sense.
For countries like India, it's really about fueling unprecedented urban and industrial development, which requires secure and ample energy reserves. And what's more, other significant markets like Japan, South Korea, Singapore, Southeast Asia, they're all showing average annual growth rates above 4%.
So it's widespread.
Exactly. It indicates a widespread high-demand environment for crude oil storage right across the entire Asia-Pacific region, driven by incredible economic transformation and just a relentless need for energy.
Okay, fascinating stuff in Asia Pacific. Moving south then, South America, the market there grew from over $920 million in 2021 to an expected $1.55 billion by 2033, with an average annual growth rate of just under 4.5%, 4.449%. Brazil alone is forecast to contribute over $600 million by 2033.
And look at Argentina, showing particularly strong growth, an average annual rate of nearly 5%. 4.962%, expanding from about $167 million in 2021 to almost $300 million by 2033. Again, these regional differences, they can reflect specific upstream developments or maybe new export ambitions.
Right. And the Middle East, a historically critical region for oil.
Of course.
The market there valued at over $555 million in 2021, expected to grow to over $933 million by 2033. Saudi Arabia contributes significantly naturally, and countries like UAE and Turkey are showing impressive average annual growth rates, over 4.7%.
Yeah, strong growth there too. And finally, looking at Africa, the region generated over $412 million in 2021 and is expected to reach nearly $687 million by 2033. South Africa leads with a projected revenue of over $267 million in 2033. Nigeria and other parts of Africa are also contributing. Across all these diverse regions, you really see how those underlying drivers, rising energy demands, increased production, are playing out in varied yet pretty consistent ways.
So pulling it all together,
Yeah.
what does this all mean for you listening and, well, for the bigger picture of our global energy landscape? This deep dive into the crude oil storage market, it really highlights its fundamental importance, doesn't it?
Absolutely.
It's not just about, extracting oil, but having the complex strategic infrastructure to store it, manage it, and ensure stability in what can be a pretty volatile world.
And when you consider these multi-billion-dollar markets and their projected growth, it really raises a crucial question. As global energy demands continue to evolve, right, with increasing focus on diversified energy sources, how will the strategic importance of crude oil storage adapt?
That is the question.
This market is a key barometer for global energy security and, frankly, economic activity. Even with the ongoing shift towards renewables, managing existing fossil fuel output efficiently, well, it remains a critical, multi-billion-dollar endeavor that underpins stability worldwide. It suggests, perhaps, a more complex, more gradual energy transition than is sometimes discussed.
Definitely food for thought. And that wraps up our deep dive into the fascinating numbers behind the global crude oil storage market. We hope you found some surprising facts and maybe gained a clearer understanding of this crucial, often unseen industry.
Yeah, thanks for joining us for this. As you consider the future of energy, maybe ponder this. While the world is certainly marching towards new energy frontiers, the sheer scale and projected growth of crude oil storage infrastructure today really underscore the immense challenge and the strategic decisions involved in truly transitioning our global energy system. There's always more to learn and connect.
Welcome to the Depth Dive. Today, we're diving into the dynamic, often kind of hidden world of the crude oil storage market.
It's a fascinating one.
Absolutely. Our mission here is to really cut through the noise, extract the key insights on what's driving this market, what's holding it back, and maybe touch on those really interesting trends that are reshaping, well, a vital piece of the global energy puzzle.
Yeah, it's moving fast.
It is. And why should you, listening, care about where crude oil gets stored? Well, think of it like this. It's the silent backbone, Global energy security, economic stability.
It touches everything.
It really does, from fuel prices to international politics. So, yeah, get ready. We might uncover some surprising stuff about an industry that isn't just growing, it's fundamentally changing. Okay, so let's maybe start unpacking this. What's genuinely fueling the demand right now for crude oil storage? I mean, beyond the day-to-day stuff.
Well, it's more than just those everyday fluctuations.
Mm-mm.
The real drivers are often the extreme swings. Think back to 2020. Remember when oil prices went negative?
Oh, yeah, unforgettable.
Right. That wasn't just a blip. That pushed global storage capacity right to its absolute limit. Or think about now, with economies reopening fast, sometimes that creates sudden bottlenecks at key storage hubs.
Right.
And that can cause price spikes even if there's plenty of theoretical supply out there. So these aren't small shifts. They're moments that really hammer home how critical storage is, even when it's invisible.
That's a great point about the extremes. So, when you mention those supply-demand imbalances, how big a deal is this hedging strategy and actually driving new storage investment? Is it just short-term tactics or is it more fundamental?
Oh, it's absolutely fundamental. It's not just about, hoarding oil, hoping the price goes up. It's a much more sophisticated risk management approach. It really underpins long-term planning for many players.
How so?
Well, imagine a refiner. They know they'll need X amount of crude in, say, 6 months. If prices now are low, they can buy futures contracts and lock in physical storage space. By doing that, they're hedging. They're protecting themselves against future price jumps, ensuring some cost predictability. And that kind of strategic thinking, trying to smooth out volatility, directly fuels big investments in building more capacity, both onshore and offshore.
That makes sense. So, it's less about pure speculation and more about, well, managing risk in a really volatile market. Okay, what else is pushing the need for more tanks, more caverns?
Another huge driver is just the sheer expansion of refining and petrochemical infrastructure globally.
Yeah.
We're seeing massive growth, particularly across the Asia-Pacific and the Middle East.
Right, those huge new complexes.
Exactly. These new mega refineries, some handling hundreds of thousands of barrels a day, they need an absolutely rock-solid, consistent crude supply. Can't have interruptions.
Yeah, consistency is key.
Totally. And that necessity requires just colossal storage capabilities everywhere. At the port, near the refinery itself, along the pipelines, you need buffers at every critical point.
So as they build out processing, the storage has to keep pace.
It has to. And you see that reflected in the investments. Huge tank farms, yes, but also things like subterranean caverns, even specialized floating storage units, just to keep that feedstock flowing smoothly.
Okay, now here's where I think it gets really interesting. The whole strategic reserve angle, we all kind of know they exist. But what's changing now? Why are SPRs suddenly such a big driver for storage expansion?
It's really about the scale, and I think an increased focus on national energy security. Governments around the world, the U.S., China, India, are prime examples. They aren't just maintaining their strategic petroleum reserves, their SPRs. They're actively increasing them.
Okay.
And this isn't just about having a little extra cushion anymore. It's a deliberate national strategy, building a really robust shield against major supply shocks.
Like what kind of shocks?
Well, anything really. Global conflicts, cutting off supply lines,
Hmm.
major natural disasters hitting production areas, maybe even another pandemic-like event that disrupts everything.
Preparing for the unexpected on a massive scale.
Exactly. And these huge government initiatives, they drive multi-billion-dollar investments, not just building new tanks, but also modernizing existing networks, making sure the whole national oil storage system is resilient enough for, well, truly unprecedented events.
So, okay, we've got the strong demand picture, market dynamics, national security. It's pushing growth. But like any major industry, especially infrastructure, there's always the other side, right? What are the big hurdles, the restraints?
A primary one, and
Right.
it's a biggie, is just the sheer capital cost involved. And then the ongoing maintenance. Building a modern crude storage facility isn't cheap.
Millions, billions.
Multi-million,
Yeah.
often multi-billion-dollar projects, yeah. And that's just the upfront construction.
Yeah.
Then you've got all the complex safety systems meeting tough regulations that keep changing.
Hmm.
And then just the constant upkeep. You have to maintain integrity, prevent leaks, prevent environmental issues. It all adds up.
That kind of financial barrier must be tough, especially for maybe smaller companies or folks operating where margins are already thin.
Absolutely. It definitely limits who can realistically enter or expand in this market.
Okay, what else? Where else do the challenges lie?
Then there's the growing weight of environmental and regulatory pressures. It's understandable, right? Oil storage facilities, they carry inherent risks, leaks, emissions, potential contamination of soil or water.
So they're under the microscope.
Intense scrutiny. And that leads to incredibly stringent regulations. Air quality standards, waste disposal rules, land use permits. It's a complex web, and it's constantly evolving.
And I assume complying isn't cheap either. Expensive upgrades, constant monitoring. Sounds like a headache.
It comes with substantial costs, definitely. You need expensive tech sometimes just to meet the standards. Continuous environmental monitoring, often in real time now, and just navigating the permitting process can be long, complex, and adds significantly to the overall project cost and timeline.
Are there physical constraints too, like just finding space?
Yes, absolutely. That's critical. Finding suitable land, especially in the right places, prime industrial zones, key port cities, major logistics hubs, is a real bottleneck.
Because everyone wants that land.
Exactly. These are often the most strategically valuable locations for storage, but they're also in high demand for manufacturing, logistics, housing, you name it. Urbanization pushes up land values and shrinks the available footprint.
So let me see if I've got this. You've got high initial costs, high ongoing costs, tough regulations, and it's hard to even find the right piece of land because it's scarce and expensive.
Yeah.
That really does paint a challenging picture for building new infrastructure.
It does. It restricts where and how quickly new capacity can come online.
Okay, but even with those challenges, things are changing. You mentioned trends earlier. What are some of the innovative solutions or transformative shifts we're seeing? How is the industry adapting?
Well, one of the most dynamic areas is the growth in floating and offshore storage. It's really taking off.
What does that look like? Like big ships.
Yeah, partly. We're talking about technologies like FPSOs, that's floating production storage and offloading units. Think of them as mobile oil fields combined with storage tanks. They let companies tap into offshore reserves without building fixed platforms.
Which must be cheaper and faster sometimes.
Often, yeah. And then you have VLCCs, very large crude carriers. These giant tankers, traditionally used just for transport, are increasingly being used as, well, floating warehouses.
Just parked somewhere.
Sometimes, yeah. Especially when market conditions make it profitable to store oil at sea, like in a contango market. It offers flexibility that onshore storage might not have. It acts like a kind of liquidity valve for the global market.
That's fascinating. So incredible flexibility there, being able to move your storage, adapt quickly. That seems vital in such a volatile market. What about technology on land? Anything happening in the traditional tank farms?
Oh, absolutely.
Right.
Technology is completely transforming how these facilities operate. Digitalization is huge. Smart monitoring is becoming standard. Think IoT Internet of Things. Sensors everywhere. They give you real-time data on everything. Tank levels, pressure, temperature. Crucially, they can detect the earliest signs of a potential leak. Much more precise than older methods.
Wow, okay.
And then you layer on automation, advanced data analytics. It lets operators move from just reacting to problems to actually predicting them. Predictive maintenance, optimized operations.
Which must boost safety dramatically
Hmm.
and cut costs if you fix something before it breaks or leaks.
Exactly. Enhanced safety, better efficiency, lower maintenance costs. These intelligent storage management systems. Yeah, they're rapidly becoming the new industry standard. It's a pretty fundamental shift in how these places are run day to day.
Okay, that's a big one. Any other major trends shaping the future here?
Yes, and this one is maybe the most strategically interesting for the long term. It's the integration with renewable energy and carbon capture initiatives.
How does oil storage connect with renewables?
Well, as the world pushes towards decarbonization, savvy storage operators are looking at their existing assets pipelines, underground caverns, large land areas, and thinking, how else can we use these?
Repurposing them?
Exactly. They're exploring how this infrastructure could support carbon capture and storage projects, CCS, or maybe hydrogen fuel storage and transport, even integrating with biofuel systems.
So, using the old infrastructure for new energy systems, that's clever.
It's very clever. It's this dual-use approach. It potentially gives a much longer life cycle to these traditional storage assets, makes them relevant in the energy transition.
And aligns them with sustainability goals. A real game changer, potentially.
It could be, yes. It positions them not just as part of the old energy system, but as potential enablers of the new one.
Okay, so let's recap this deep dive a bit. We've journeyed through the world of crude oil storage. We've looked at the market forces, the security drivers pushing for growth.
Right, the hedging, the refinery expansions, the SPRs.
Then we navigated those significant challenges, the high costs, the regulations, the land scarcity,
Definitely big hurdles.
and finally uncovered these really incredible transformations happening. Floating storage, smart tech, making things safer and more efficient, and this fascinating integration with green energy and carbon capture.
Yeah, I think the key takeaway is that this sector isn't just getting bigger, it's fundamentally adapting, it's transforming in response to these huge global shifts in energy demand, security concerns, environmental priorities. It's becoming a much more complex, much more multifaceted industry than maybe people realize.
Absolutely. So, for you listening, here's maybe a final thought to chew on. We've seen how vital crude oil storage is, but also how adaptable it's becoming, finding new roles even in the energy transition. It makes you wonder what other hidden essential infrastructures out there might be poised for similar quiet revolutions as the world keeps changing with things like digitalization and the shift to cleaner energy. Something to think about.